And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And welcome to the holiday version of The Real Investment Show. Of course, today is Juneteenth. Markets are closed, banks are closed, everybody's closed. So, but we're here. We're going to talk a little bit about what happened yesterday, kind of look at what's going to happen for the rest of this week here. But again, this is, today markets will end flat. I can almost guarantee that markets will not change today. Now, I mean, something could happen, right? I mean, something could definitely happen, but I'm pretty sure markets aren't going to change today. But we'll get into all that this morning. So yesterday, of course, we had retail sales. And interestingly enough, retail sales, as I talked about yesterday, I said, look, retail sales have been weak over the last couple of months. Don't be surprised if, we have a little bit stronger print. We didn't. We had a weaker print on retail sales as the consumer continues to show signs that they are slowing down. Now, interestingly enough, so that was the seasonally adjusted retail sales. The non-seasonally adjusted retail sales had a fairly strong monthly gain. And again, that's not surprising. We had, some pull forward of activity in March. April was slower. So again, when you have a slower month, you typically have kind of a rebound. People, kind of play catch up. They need to go buy groceries, whatever it is. And so you get a little bit stronger spending. But once you do all the seasonal adjustments, we did see a weaker print yesterday, and that did feed into the bond market. Bond yields were a good bit higher yesterday now because, again, this weaker data suggests that the economy is indeed slowing down. Doesn't mean a recession, just means it's slowing down. And, remember the Atlanta Fed had a 4.1% growth rate for quarter two. That's come down sharply. We're at now around 2% on the Atlanta Fed GDP now. So we've had a fairly sharp contraction, 1.3% growth in the first quarter. So there is a trend now from the third quarter of last year of slower economic growth, and it's slowing pretty quickly. So again, this is going to start to feed into potentially, these estimates for earnings going forward, and particularly in the retail space. We have very elevated, and we talked about this yesterday on the show. I showed you a chart of analyst expectations for earnings through the end of 2025. Very elevated, 20% growth rate. Well, in order to have that, you've got to have a fairly robust economy generating some activity. And again, doesn't mean it can't happen ultimately, but it certainly seems to be more problematic when you start looking at the consumer, which is 70% of the economy, and they're slowing down. So again, if I'm slowing down my spending, then why will companies, and this is the expectation, the companies are going to go spend a lot of money on CapEx. Well, why would I spend money on CapEx, expanding my plant, my products, whatever it is, creating more inventory, if I don't have any demand for it? So this is one of the disconnects between Wall Street analysts who have very optimistic views about the markets and the economy versus kind of what we see in the economic front. Now, there's a reason for that, obviously. The S&P has had just a huge run here, and stocks are very overvalued. So in order to justify those valuations, in order to get you to buy stocks, and again, this is what Wall Street's job is. Wall Street's job is to sell you stocks, right? So in order to justify, hey, don't worry about it, Mr. and Mrs. Smith. You can buy stocks here because if earnings go to the moon from over here, then these are cheap, right? This is always the game. So again, we've got to raise those estimates in order to lower valuations to say, oh, stocks are still fairly valued here, but the economic data really doesn't support that. But they can't tell you that because then you wouldn't buy stocks. But this is where we are, right? So again, we keep talking about this problem of the market in terms of the participation, right? So in the market cap weighted space, this advance is very strong and is being driven by the largest of large cap stocks. By the way, Nvidia overtook Microsoft yesterday, and Nvidia is now the largest market cap weighted company in the world, right? So, or at least in the S&P 500. There may be another one out there somewhere, but I don't know of one. But Nvidia is now the largest, larger than Apple, larger than Microsoft. Nvidia has now taken the lead. Also, coming up at the end of the month is the rebalancing of the iShares technology ETF. That ETF is one of the largest ETFs in the world for technology, and their weighting methodology has two stocks with a 20% weight in the top. The next stock down has about a 6% weight, about 5 to 6, and then there's a couple of 5% weights, and the rest of them are about 2% weights. That's just their indexing methodology. That's how they weight their ETF. So what's going to happen at the end of the month is that Nvidia, which is now about a 6% weight in that ETF, will go to a 20% weight along with Microsoft. So both will be rebalanced to a 20% weight at the end of the month. Apple, which is currently a 20% weight, will go to 6%. So basically Nvidia and Apple will swap spots in that ETF. So that's going to require about $13 billion worth of sales in Apple shares. Now, it's not a huge amount, but there is going to be an index swap in that. So that is going to potentially apply some pressure at the end of the month on Apple. But a lot of portfolio managers that track that ETF or that index have already made that swap ahead of time. So they're already working on those rebalances. But anyway, so that's just kind of some of the interesting stuff that's kind of going on. Just remember, though, that Wall Street's interest is not giving you accurate information. Their job is to make sure that you're buying stocks. And so they will adjust. And this is why we always play millennial earnings season every quarter, right? We keep reducing earnings until we actually beat them. That's part of this game. So just understand that when you hear stuff from JP Morgan, Wells Fargo, et cetera, about how great the market is and earnings are awesome, remember there's a very definite, and look, I'm not saying it's nefarious, I'm just saying it's a very definite bias towards pushing stocks higher because that's how they make their money. Investment banking, selling shares, those type of things, that's their job. That's how they make money. They sell products. They're a business. Wall Street isn't out there to make sure you're doing the best thing with your money. Okay, let's talk about what you need to know before the bell this morning. The market did rally to a new all-time high yesterday. Great. This deviation from the 50-day moving average is now getting really to one of the more extreme levels that we've seen just recently. Historically, when the market is overbought, and we're probably a little bit more overbought on a relative strength basis than I've actually seen in quite some time, markets typically have this short-term kind of correction back to the 20-day moving average at least, if not the 50. And particularly when it's extremely overbought as you are right now, that's going to become much more possible. But again, going all the way back through history, previous periods, we have these corrections, and this just kind of occurs over and over again, that you're going to have these corrections back to some level. So again, just kind of pay attention that, again, these are minor corrections, but if you're looking to add stocks, I would just be a little bit cautious here because markets are extremely overbought. They're very stretched. You're going to get some type of correction, at least to the 20-day moving average, if not to the 50. Now, that won't happen today. There will be no correction today because the markets are closed. But between now and, say, the end of the month when portfolios do the rebalancing for the end of the quarter, a correction back to at least some minor level of support will give you a better opportunity to put capital to work versus buying stuff tomorrow when the markets are open. So, that's just, again, just a little bit of risk management here. And again, as we talked about yesterday, this is just minor gardening, right? This isn't making drastic moves. It's not selling everything in your portfolio, just minor gardening, right? Pull the weeds, harvest some fruit. If you don't harvest what you're growing, then it'll all just rot on the vine, right? And this is why long-term just holding stuff typically doesn't work out as well as portfolio management does just over time. So just manage the risk accordingly and you'll do a lot better. That's what you need to know before the bell this morning. When we come back, we'll pick up. We've got a few topics to get into this morning on this no session day in the markets. Be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
It's back. Get ready for our next live chat edition of Candid Coffee with Richard Rosso and John Penn, Saturday, June 29th. Anything you want to know, we'll find the answer.
What's going to happen to interest rates?
Should I put all my money in gold?
Has Lance been working out?
Register now and submit your probing questions for John and Rich at realinvestmentadvice.com.
How far will Nvidia go?
What about Social Security?
Who does Mike Leibowitz's hair?
The live chat edition of Candid Coffee with Rosso and Penn. Register at realinvestmentadvice.com. Realinvestmentadvice.com.
Are those your pajamas?
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So good morning, welcome back to the show. JC in the chat this morning wants to know, has anyone ever tried Death Wish coffee? No, it's terrible. You should absolutely not drink it. That is the worst coffee on the planet, right? Because I don't want him to drink it, so we'll have more for us,
that's
right?
exactly right.
Exactly.
Yeah.
We keep that for us. That's some good stuff right there.
Doesn't need a mug.
Yeah. You just kind of eat it with a spoon. If you brew it right. No, It's actually very good coffee, but you've got to have a preference for bold coffees, right? I mean, it's if you're kind of the Folgers morning roast guy, yeah, Death Wish isn't for you. Well, I mean, you have to put some caveats out there, right?
Yeah, that's right. Disclaimers.
You can't just go in to drink, I think I'll just have some Death Wish this morning. You'll be like a cat plugged into an outlet. That's most of the day.
JC, huh?
Yeah, JC wanted to know.
Okay.
Of course, Jesus Christ. he'll drink a cup of coffee, like change his name to Jesus Christ. That's some strong coffee.
Oh, my.
Anyway, it is early in the morning on a holiday.
And that's why we drink it.
Exactly. Good stuff, though. See, those are good questions. You should ask more of those questions. I don't know what else y'all are doing in chat this morning. They're talking about Marie's asking how many cats people have. None. I'm a dog person. So, by the way, last night, my wife was watching America's Got Talent.
Yes.
And so it was a rerun. And so she was watching it, and this dog act comes on, and it's this lady that taught her dog to dance. And really good. It was a really, really good act. But my dog loves to watch dogs on television. And so he was like standing in front of the television, just glued, just mesmerized to this whole act. And then after it was over, he just looked back at us and was staring at us, and he was like barking. And we had to rewind it 3 times so he could watch it.
Well, he has you well trained.
Exactly. And so
what kind of dog was it?
My dog.
No, dancing.
I don't know. She was from Israel. And this dog looked like a kind of a crossbreed between maybe a border collie. It was colored like, I don't know. And I'm sure there's a specific breed that this is, but it kind of looked like a crossbreed between a border collie and is about the size of a Labrador.
Okay.
So, but real thin. So I'm sure there's a breed for that's in Israel, but anyway,
thin from all that dancing.
Could be, but she trained it very well. So it was a really good act, but my dog really enjoyed it a lot last night. So I encourage you, if your dog watches dogs on television,
find the episode.
Yeah. So if I want to keep him entertained, I'll just put Lion King on, and he will literally watch the entire 2 hours of Lion King.
Really?
Yeah. Even though it's an animation, he'll watch the whole thing.
Cartoons.
Yeah. So there you go. Cats are not awesome creatures, Marie. They pay no attention to anybody. They do their own thing.
Did you see that meme with the cutaway of a cat, and inside is an alien?
They just want to kill you, right? If you pay attention to a cat, they're always just plotting how to kill you. They just haven't figured it out yet because they don't have thumbs. If they had thumbs, they would be dangerous.
Yeah.
You know that human beings have 2 things that make them better than about any other species on the planet. Obviously, opposable thumbs. Yeah, unique attribute, and the ability to throw.
Really?
Yeah. I was reading this the other day. I always know about the opposable thumbs, right? What separates humans from everybody else is opposable thumbs, so we can pick stuff up. But it's the ability to throw. Humans can throw. Nolan Ryan can throw better than any other creature on the planet.
Wow.
So I don't know what that means, but there you go. That's your morning bit of knowledge.
What if?
Yeah. If somebody ever asks you, what's the 2 things? Throwing and thumbs. That's what gets us there.
But someone who is all thumbs can't throw.
This is a true statement.
I know from personal experience.
So, all right, let's get serious this morning about work. So, as we were talking about yesterday, a little bit, look, the market is very bullishly biased here, and as I said, yesterday, Nvidia overtook every other company on the planet as now the largest market cap company in the world, right? Supposedly, and not surprising, right? This has been all about the Nvidia chase. As I talked about before, this is a function of positioning. People aren't buying Nvidia because they want to. They're buying Nvidia because they have to. Because if I'm an indexed portfolio manager, if I run an S&P index fund, or if I benchmark my portfolio to the S&P 500, right? So I'm a large cap growth fund, I am a technology fund, whatever it is, I have to bench my portfolio to a relative index, which means that every time Nvidia goes up in price, I have to buy more of the shares to keep my portfolio in line with that. So this is what we call we've talked about before. We've called this force feeding. So it's just a function of momentum. So as the momentum of the stock goes higher, it drags more and more flows into the stock itself, which keeps pushing the stock higher. Now, eventually, there's disappointment. Earnings won't come in line with expectations, whatever it is. There will eventually be some disappointment that will bring the price of the stock down. And then the force feeding runs in reverse, because as the stock declines, it becomes a smaller weight in the index, requiring more and more selling by all of these portfolio managers to align their portfolio with the index. So it runs in reverse also. So you just have to be aware of that is that, this eventually ends, but these things can last a lot longer than you expect. One thing, we've talked about before is the performance differential between the S&P 500 market cap weighted index, which is basically dominated by 10 stocks that make up about 38% of the overall index, versus the equal weighted index, where Apple, Nvidia, Microsoft make up a much, much, much smaller portion of the overall index. And of course, there's a massive performance difference between the equal weight index and the S&P 500 market cap weighted index right now. There's about a 50% difference in performance. That performance differential is now the highest level that it's been since the last time we had a basket full of technology stocks driving the markets, which was in 1998, 1999. And that was when you had a handful of stocks that were dominating the rise in the markets. The passive indexes, which we had like 3 at the time, the triple Qs, the diamonds, and the spiders, they were all having to buy the indexes. Everybody else that was indexing at the time had to buy those stocks, which created this same bifurcation in the markets. And ultimately, we had the correction. Now, there's a difference, right? Everybody wants to right now go back and compare where we are today to where we were in 2000. There are a lot of differences. A lot of those companies back then did not have revenues. They, did not have business plans to speak of. The projections and the assumptions were based on really just totally irrational thought processes. But again, it was justification. And just as I was saying earlier, we keep ratcheting up earnings expectations for the S&P 500 to justify how we get to how we justify these current valuations, and these valuations are really cheap. And again, we talked about on Monday that a vast majority of the analysts right now who made predictions for the year-end outcome of the S&P 500 for the end of this year are grossly behind, right? A lot of these, analysts had predictions for the end of this year at 5,000, 4,900, 5,100. The market's at 5,400. And like we talked about, and we put this out on Twitter Monday morning, we said, hey, get ready for the rash of upgrades. Well, that's now begun. ISI, Goldman Sachs, pushing their estimates for year-end, the end of this year, to between 6,000 and 6,300. So again, now we're at 5,400. So we're talking about another roughly 1,000 points on the S&P between now and the end of the year. Now, not saying that can't happen, right? But this is the trap that Wall Street gets themselves into. In order to now, if their year-end target, and let me put it this way: if the year-end target is 5,000, let's just kind of pick the median. So if the year-end target is 5,000 by all these Wall Street analysts, and the market's currently trading at 5,400, why on earth would you buy more stocks from them? Right? They're telling you that the market's going to be lower over the next 6 months. If their year-end target is at 5,000, the market's at 5,400. Why would you buy stocks here? Right? It doesn't make any sense. Certainly doesn't justify the valuations. So analysts, in the same trap as everybody else, in order to sell you product, have to increase their estimates by the end of the year. So now I'm at 6,300. Now I've got some breathing room. So now I can sell you more stocks. I can do more investment banking. I can sell secondary offerings. I can do private equity placements. I can do whatever it is that I need to do, right? I got to make money. And in order to make money, I need you, the retail consumer. I got to sell it to you. You're the end buyer of all of this. No matter what people are doing, you're the end buyer, right? Pension fund buys it. Who's the end buyer actually? It's not the pension fund. It's you. Because it's your money that's in the pension fund. If I'm selling secondary offerings for a corporation, who's the end buyer? You are, because you're the one buying the shares. So at the end of the day, you're the cannon fodder for Wall Street. Just remember that, just as you kind of keep things in perspective. Just remember where you are in the order of the food chain. You may have opposable thumbs and the ability to throw, but you are not the apex predator. That is Wall Street. Be right back.
Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
It's back. Get ready for our next live chat edition of Candid Coffee with Richard Rosso and John Penn, Saturday, June 29th. Anything you want to know, we'll find the answer.
What's going to happen to interest rates?
Should I put all my money in gold?
Has Lance been working out?
Register now and submit your probing questions for John and Rich at realinvestmentadvice.com.
How far will Nvidia go?
What about Social Security?
Who does Mike Leibowitz's hair?
The live chat edition of Candid Coffee with Rosso and Penn. Register at realinvestmentadvice.com. Realinvestmentadvice.com.
Are those your pajamas?
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
So there's a whole big food discussion going on in our chat channel right now. Brent just weighed in saying can't beat a hot chocolate chip cookie from Chick-fil-A.
The Real Investment Show podcast.
I disagree because at Slotsky's not only can you get a chocolate chip cookie, you can also get a hot cinnamon roll.
That's like apples and oranges.
That is not apples and oranges.
It's cookies and bun.
But you could take a Cinnabon and put it between two chocolate chip cookies.
Yeah, well, you can take a Cinnabon
at realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. Let me just clear up something for Marie. I do not hate cats. Okay, I do not hate cats. I used to have a cat, and when I put a collar on it and tried to go running with it in the park, it didn't work out well. So I had to get dogs. So because I like to take my dogs running, and I like dogs because I can let them off the leash when I go running, and they will stay with me when I run. So I don't have to have them leashed, and they just stay right by me and do what they're supposed to do. So, and also too, if somebody breaks into the house, the cat I used to have was not a good alarm. At least my dogs bark. My dogs are not good security dogs by any stretch of the imagination. If you break into my house, just bring food with you, okay? Because if you feed them, they'll be fine, right? But they're going to bark initially, and then you just have to avoid the shotgun blast. But other than that, you'll be fine breaking into the house. So, but no, I just want to be clear. I do not hate cats. I love all animals, no matter what they are. I've got 4 kids. I don't have a choice. cats, dogs, rugrats, they all fall into the same category. So anyway, just talk a little bit about markets this morning. Larry, hush, do not get involved in the conversation. Just talk a little bit about Nvidia, the markets, and again, just being a little bit just aware as you get into this. Again, there's nothing wrong with the markets right now. As we can come up with all these reasons why things are overvalued and why things are going to crash and all this type of thing, and eventually they will, right? It's just if there will be a major correction at some point. We're talking about major, right? 30-40%. That's going to happen. What causes it, when it happens, it's unknown. And this is the really important key about this. And we get lots of phone calls from people. We get lots of emails talking about, well, I'm just going to wait to invest because I'm just going to wait for this crash to occur. Whenever it occurs, then I'll invest. And that's fine. You can certainly do that. And as we talked a little bit about previously with John yesterday, is that the problem is you wind up missing out more than if you just bought today and went through the crash, right? And again, we go back through history, whether it was 2008 or a whole variety of other events that have occurred. A lot of people got out of the markets and never came back. 1974, people got out of the markets. They never actually came back. A big bulk of the investors that are in the markets, that were in the markets in 2000, didn't make their first investment until 1990. About 80% of those people didn't make their first investment until 1995. Again, the market hype, right? Sucked them all in. Then after the dot-com crash, a lot of those people didn't come back. So most of the people in the markets today, a big chunk of them have not ever been through a big crash because they didn't even get into the markets until after the crash in 2008. So, now there's a lot of you out there like me that have been through these things before. I went through the dot-com crash. I went through 87. I went through 2008, been through these things before. And, certainly understand the dynamics of how these things occur. But most people have actually never been through a real bear market. There's a few of you have, right? And you remember what that was like. And for a lot of individuals that went through that, they're like, I never want to go through that again. So every downturn is now a remembrance of that event. But that was a very unique event within its own structure because of the subprime issues. And one of the mistakes that we make is now trying to tie everything back to a previous experience. So again, we have this issue with Nvidia and technology stocks, and right. So immediately the analog is, this is like 1999. Certainly some similarities, right? But a lot of differences. Which means that whatever reverts this process, and it'll eventually occur, right? It'll be a disappointment of earnings and outlooks and forecasts, and AI doesn't become the thing that everybody thinks it's going to become, whatever it is, right? Something else comes along that's even better. It's the new thing. It's IA, whatever. That's the disappointment. And so if something comes along that's a newer, shinier object and Nvidia doesn't have it, and the market moves, and this is one of the problems with the markets, is that, Nvidia right now has an ironclad grip on the artificial intelligence chip space until somebody else comes along. And this is a problem with Nvidia, is that if somebody comes along with a better mousetrap, it doesn't take me long to just go, I'm not buying those chips anymore. I'm going to buy AMD's chips or whoever it is, right? And so all of a sudden, the revenues go somewhere else, and there's a massive drop-off in the revenue for NVIDIA. That can happen. I'm not saying it will happen, so don't immediately go and start shorting NVIDIA today because Lance said, somebody's coming out with a better chip. I'm not saying that. I'm just saying that's the risk. The risk is always that, as we talked about last week in our blog post, is that trees don't grow to the sky. And something will change, or things just don't reach the ebullience that everybody thinks that we're going to get to. currently, and that's what's driving the market. It's all about the fantasy at the moment, right? And reality can be a far different thing. So just kind of keeping that in mind. Outside of that, the thing that, I think is worth keeping a watch on is this economic data. The economic data is slowing down rather dramatically. And again, we're seeing this on a lot of different fronts, but even on, particularly on the manufacturing front, definitely seeing some signs of weakness. But again, manufacturing only makes up about 20% of the economy, so it's not as important to the overall view as services are. Services have been somewhat resilient up to this point, but keep a watch on retail sales because retail sales feed into services. And if that is slowing down, right, if this is not just a short-term anomaly that, and retail consumers are about to come roaring back, right? They just kind of took a couple of month break and hiatus on buying stuff. Now they're going to come roaring back. Unless that's the case, that's going to start feeding into services. And I would expect that to happen as, people are making the decision not to Grub Hub as much, right? Because it's expensive. I give you an example. My wife and I, right? I mean, we're kind of guilty of that. Is that we get home from work. I work long hours. She works long hours. We get home at night sometimes, and when it's just me and her, right? And we don't have any kids home from college or whatever. Neither one of us feel like cooking. Normally, we take turns cooking. I'll cook one night. She'll cook one night. Whatever it is, and we'll just order and just have it delivered, and we've stopped doing that just because it's getting ridiculous. I mean, the cost of just eating out is expensive. Last night is a good example. The house that we're in, as we're renting a house right now as we're remodeling a new house, and that house is now up for sale in the neighborhood that we're in, and so we're having these showings that we have to get out of the house for. So last night we had 2 showings back to back at the house. And so my wife and my son's home from college right now. So my wife, my son, and I, and the dogs, we went to Beck's Prime on Dairy Ashford because we can sit outside. And it was a nice evening because of the recent kind of rains and stuff. Temperatures come down a bit. So we decided to just go have a couple of burgers, sit outside on the patio with the dogs, and just kind of spend some time together and wait for the showings to be done. So 3 burgers, 1 order of fries, because my wife and I don't eat fries right now because we're on diets. 3 teas was almost $70, right? Now, throw on top of that, delivery fees, driver tips, all that, you'd be talking close to, $80-90 for a meal, right? It's just getting really expensive. And so more and more consumers are just now making that decision that I'm just going to cook at home and I'm not going to order stuff. So again, so services are companies like what's included in that services sector. Yes, it's leisure, it's hospitality, but it's also delivery services. It's all these other type of service type businesses that are included in that services index. So we're seeing consumers make that conscious decision to cut back on services to save money. So again, while services has stabilized, right? It's not really going up or down. It's kind of just gyrating back and forth right now and holding in expansion territory at the moment. And that's what's been holding up the economy. So 80% of the economic equation is services. So that is holding up economic growth at the moment on the services side, but there's clear evidence that is beginning to slow down. And so as we start to look forward into the rest of this year, really pay attention to what's happening with services, because that's going to lead to the outcome of the inflation question. That's going to lead to the outcome of the interest rate question, and obviously the economy. All right, quick break. We'll come back. Wrap up this morning's edition of the No Market Today show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
It's back. Get ready for our next live chat edition of Candid Coffee with Richard Rosso and John Penn, Saturday, June 29th. Anything you want to know, we'll find the answer.
What's going to happen to interest rates?
Should I put all my money in gold?
Has Liz been working out?
Register now and submit your probing questions for John and Rich at realinvestmentadvice.com.
How far will Nvidia go?
What about Social Security?
Who does Mike Leibowitz's hair?
The live chat edition of Candid Coffee with Rosso and Penn. Register at realinvestmentadvice.com. Realinvestmentadvice.com.
Are those your pajamas?
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. You know, one of the big debates that, you know, eventually we as the American voter need to address is the amount of money that is literally wasted in government. Whether it is the amount of, you know, the billions of dollars that have just gone missing in military budgets, to money that is allocated to be spent on certain things that is either misappropriated, frauded, or a whole variety of other issues. It never gets to where it's supposed to go, right? You know, we remember all those PPP programs, the Payroll Protection Act programs that we did, you know, just billions of dollars. And who would have thought that people would defraud the system, right? I mean, surprise. Medicare fraud. You know, we have a huge problem with Medicare in terms of its funding. And we just have a massive amount of Social Security and Medicare fraud. And it seems to me that this isn't really difficult to figure out in terms of reducing your fraud and waste, which is why we have accounting systems, right? If you want to, you know, claim Medicare, whatever it is, you know, you apply for it. We verify your identity, identify your illness, whatever it is, you know, why you're going on to Medicare other than just age. And then you either get benefits or you get denied. I mean, it doesn't seem to be overly complicated, particularly with the hundreds of thousands of non-essential workers that we have in government. It seems like we could assign a few of them to help reduce the fraud, which would wind up paying for all the other non-essential workers that we pay for in Washington. But this just goes on and on and on. Good example. Do you remember the $42 billion in funding? $42 billion, not million, billion. We spent $42 billion to provide Americans high-speed internet access across the country, right? All these areas that didn't have access to high speed, we were going to give them all access to high-speed internet because that's a necessity. Of course, that certainly benefits the providers of that high-speed internet like Comcast and Verizon and others. So certainly no lobby group was involved in this allocation of funds to deliver high-speed internet access all across the country, that $42 billion. So where did it go? Nobody knows. But what the FCC has just come out and said is that not a single American received high-speed internet from that program. So $42.5 billion got spent. It went somewhere, but not one person received internet access. So where'd it go? But this is my point, right? We want to walk around and we want to complain about the debt. We want to complain about the deficit. And, we're throwing $180 billion at Ukraine. We're spending $42 billion on high-speed internet access. A couple $2 billion, just $2 billion, you could pretty much wipe out homelessness in America, right? You could feed the poor. California has more than 20% of their population below poverty status right now. So there's a whole lot of problems. If we could clean up what we do in Washington, track the money, which is kind of the job of government, right? If you're going to spend this money, you should be responsible and spending it with some type of responsibility and tracking where it goes and making sure it gets to the right places. And that, this is the stories about $300 toilet seats and $500 hammers, right? It's just all of the government fraud and waste that occurs because a lot of this spending is, and again, this goes, back during the Obama era, right? We spent hundreds of millions of dollars doing stuff for climate change that wound up going to companies that were bankrupt or went bankrupt. It was interesting just talking about another issue. Just the other day I was listening to a group of people complain about the cost of insurance and healthcare and how expensive it is to get insurance and healthcare now, and it is. And I'd like to remind you that this is all the result of the Affordable Care Act. Because once you included people with pre-existing conditions in the same pool as people that were healthy, premiums had nowhere to go but up because you have to pay for them. This is something when and Brent and I were on the radio back in 2008, in 2009, when this was first coming around, and we interviewed doctor after doctor after doctor on this. And we talked about the issue that as soon as you include people, we used to have pools in tech. We had a pool in Texas, as an example, for people with pre-existing conditions. You paid a higher premium because you're already sick, but you could get insurance. But under the Affordable Care Act, it's like, oh, everybody needs insurance. It's a noble thing, right? Everybody needs insurance. So we put all these people with pre-existing conditions who need money now. J.G. Wentworth. Need money now. We put them in the same pool as healthy people. Well, if you just understand the basics of how insurance works, the very basis of insurance is that we get a group of people together, we all pay into a pool, right? So we all put in $1 into a pool. And then Brent comes down ill. The rest of us are fine. Brent comes down sick, needs to go to the doctor, so he takes $50 out of the pool to go pay his doctor bill. And every month we're putting more money into the pool. Well, as soon as you put 50 people into the pool that all need money today, all the money that went into the pool is going out. So I've got to have more money coming into the pool to pay for the people that are taking it out. So as soon as you combine both sets of people in the same pool, premiums had nowhere to go but up. And this is why today your insurance is so freaking expensive. Still the healthcare system here is better than anywhere else in the world. I've lived all over the world. My son lives in the UK right now. He came down sick. By the time he could get an appointment for the doctor, he was well. So there was no reason to go. But it was an 8-week wait to go to the doctor. So these are the decisions that are made in Washington that this is, if you want to fix what's wrong, you have to start tracking the money. And that's the problem. And again, most of this is driven by lobby groups. It's driven by PACs. It's driven by all this other stuff that creates these policies. And look, there's people in Washington just signing blank checks going, oh, yeah, this sounds great. This will get me votes, right? We're going to give everybody high-speed internet access. Great, I'm going to vote for him because he's going to give me access. Here, great, $42 billion. Where did it go? $42 billion would solve homelessness. It would feed everybody in the country. We could build a lot of infrastructure on $42 billion. It's $42 billion. Not quite as much as Elon Musk's pay package, but pretty damn close. We could fix a lot of things wrong with the country. The things you complain about, we could fix. We could bring down the cost of healthcare with $42 billion. Just provide subsidies to people, right? I mean, I would rather spend, if I'm going to waste $42 billion and just for nothing, I would rather give it to the American people and say, look, here's a subsidy for your health care to help you out a bit. I don't like government handouts, right? Causes all kinds of problems. We just got through this, but at least it's going to somewhere to people that need it. If we're just gonna print money in debt and waste it, let's at least do something good with it, right? Let's help some people out. Or better yet, how about stop wasting money, period? We could probably fix our budget deficit pretty quickly if we did that. Maybe start creating some real economic prosperity in the country and things would work themselves out. Anyway, sorry you got me off on a rant this morning, but there's no market today, so that's what you get. That's what you get for tuning in on a day where there's no market. Anyway. Yeah, good point, by the way. Yeah, all that money we spent on, we were going to build out a whole system of chargers, superchargers across the country. 7 have been built. And they're building them in depressed areas of cities that don't have electric vehicles. So, again, just, buying votes, etc. All right. Look, it's going to be a light trading week tomorrow and Friday because basically once you have a holiday in the middle of the week, everybody just kind of goes away for the week already. Just kind of keep a watch on the markets. Again, we're very extended here, very overbought. We're going to have a correction at some point. Again, it won't be massive, but a correction back to the 50-day moving average right now would be almost 4.5%. So we're almost back to that correction that we had back in April. So just kind of remember how you felt during that correction. If your portfolio kind of took a beating at that point, this is kind of where you start thinking about maybe reducing some risk, taking some money off the table, those type of things. Also on the YouTube channel, we are going to launch a new sub-channel on our YouTube channel. So if you go to YouTube, The Real Investment Show, there's some sub-channels in there. We're going to launch a new one for SimpleVisor. We've got an overview video of SimpleVisor coming up this week. We're just finishing the editing of that, and I'm going to start producing some more individual, how-to videos, etc., on how to use the SimpleVisor website. So particularly as we continue to do more and more development on that platform. But anyway, that's going to come on the YouTube channel. So make sure and like and subscribe to this channel. We appreciate it. Obviously, helps keep us doing this every day. But you'll also get alerted as we post new features on that channel as well. SimpleVisor being a new channel, a new kind of a sub-channel we'll be launching here very shortly. So in the meantime, have a great holiday, and we'll see you back here tomorrow. It'll be me again by myself. Michael Leibowitz is on vacation, so you're stuck with me by myself for 2 days in a row. Sorry! We'll see you tomorrow. Have a great day.